Good afternoon. Thanks for joining our July webinar. My name is Dave Hodgins, Executive Director with the LA Better Buildings Challenge. Today we will be discussing the Investor Confidence Project, the concept of underwriting as relates to energy conservation efficiency projects, related metrics, emerging standards, and also hear an investor's perspective on underwriting efficiency projects, the relevance of standards, cost, benefits, etc. It's going to be a really interesting discussion. A couple of housekeeping items. We are recording the webinar, as always. We will be distributing that to everybody as follow-up along with the PDF of the slides. So in case you have colleagues, customers, clients that were not able to join today that you think would benefit from the content, please feel free to share it. Lines will be muted just to keep things organized, but there will be plenty of time for questions at the end. So please type those into the question drop-down on the right-hand side of your screen. You should see an option to do that, and I will make sure to cover all of those. Again, I'm Dave Hodgins, Executive Director, LA Better Buildings Challenge. Joining us today are some really all-star speakers. We've got Matt Golden, Senior Energy Finance Consultant with the Environmental Defense Fund, and he's the project lead on the Investor Confidence Project, which is a really interesting initiative that he has spearheaded and we'll be talking about today. We also have Chris Robbins, who's Managing Director with CleanFund, one of the leading PACE investors in the country, Property Assessed Clean Energy. He'll overview what PACE is for folks that aren't familiar with it and talk about some recent transactions and, again, this concept of underwriting efficiency metrics, energy savings. So a little background on the LA Better Buildings Challenge quickly before we jump into the main program. We are an initiative of the City of Los Angeles. We are part of the mayor's vision to implement his sustainable city plan, and that calls for aggressive reductions by 2035, looking for a 30% reduction in energy use in existing buildings. So we are on that continuum moving from today towards that 2035 goal. LADWP, our local electric and water utility, has aggressive goals of its own, some of the most aggressive in the country. 15% across their entire customer base. That's beyond what the state's requiring. So our role is to be out there helping to educate folks on important concepts like underwriting efficiency and savings. Our goal is 20% by 2020. Lots of numbers flying around, but it all does fit. This is a part of a local and national competition. So we are competing against other cities across the country to see who can highlight buildings, who can move the market towards efficiency the fastest and at the largest scale. We offer a range of services, really working at that nexus between real estate, policy, and technology, and helping the pieces come together. Funded by the utilities, I mentioned we work closely with the mayor's office, and we're officed at the Clean Tech Incubator. I want to thank our industry partners as well for helping to promote today's webinar, in particular for today, CCIM and IREM, and appreciate all of our partners' leadership and collaboration. We do have over 70 million square feet of buildings and counting participating, which is fantastic. We want to continue to add to that number, so please contact us if you're aware of projects, you have projects, buildings that you want to highlight, or you could use some assistance connecting with resources to help you move your projects forward. We've got a great list of existing partners, so congratulations to all of you for your leadership and partnership. We offer a range of services. I won't go through all this today because this is about Matt and Chris, but please reach out to us. We are a one-stop shop for free services to support your projects. So with that, I'll wrap up quickly with a couple of pitches. We have our annual Building Technology Showcase coming up at the end of next month. It's a great program, fast pitch presentations. You're in, you're out. You hear from 20 leading technology companies that have been vetted by the Department of Energy, the GSA, and the national labs. So we know that their products perform. Quick 3-minute presentations. So you're in, you're out. You get a quick update. You get lunch, and it's at a beautiful facility, the California Endowment here in downtown. And the call for nominations is open for our 3rd annual Innovation Awards, which will be at the end of February 2017. We've got 4 categories: Portfolio of the Year, Overall, that's Energy and Water Project of the Year, and then Energy Project of the Year and Water Project of the Year. So please get in touch with us. Let us know what you're doing, what's notable, and what we should be aware of, and get some recognition. So a couple logistical things here available as part of the follow-up. Please do reach out to us. And with that, we'll get into today's content. So I'd like to hand it over to Matt Golden, who's the project lead on the Investor Confidence Project with the Environmental Defense Fund.
Great. Thanks, David, and appreciate everybody taking the time today. I'm going to go through this presentation relatively quickly, so hopefully we have some time for questions at the end of the call. The Investor Confidence Project is an effort by the Environmental Defense Fund, which is a nonprofit, really focused on how to address barriers to energy efficiency investment. And you can go ahead and advance the slide. And in looking at the multiple barriers, the piece that we really focus on is the performance risk associated with this project. Will the energy savings that building owners, investors, utilities are counting on ultimately be there? And when you look across the many barriers that we're trying to address, and this is a study by Institute for Building Efficiency, which is funded through JCI. But this is really typical of what you see. A whole bunch of barriers that can be addressed in different ways, but the key among them has to do with the complexity of energy efficiency projects that are fundamentally unique, that are hard to understand, and as a building owner or an investor trying to make an underwriting decision and counting on that cash flow can cause a bunch of uncertainty and really result in everybody kind of discounting the value of energy efficiency because there's a lack of confidence that the savings are ultimately going to be there. Next slide. I'll just mention as we move, and we don't have to go back, but what's interesting is, the lack of funds tends to be at the top of that, and you can see in the side it was going down substantially every year through 2014. I think the reality is that we are, that, in 2016, that is not really, and we'll talk about some of that today in the segment where Chris talks about pace, but it is really not the issue it used to be. The money's out there. People often don't know where it is fundamentally. So now that the funding is available, the question is, what are the barriers that are preventing, widespread adoption? So now we can move to the next slide. Sorry about that. So at a very high level, and we'll get into the meat here in a second, we look at the kind of major barriers to efficiency finance in three categories: asset, credit, and performance risk. And essentially, just like any good Venn diagram, if you want this whole thing to work, you need to address all three to get to the middle, because that's where all the goodness happens. So there are many efforts out there, benchmarking, labeling, disclosure efforts, a lot of the work being done in LA County, addressing the issue of, if I put $1 million into my building, is it actually worth $1 million more, or hopefully something greater than that at the end? And that's really the fundamental question to ask around asset risk. Can I get higher rental rolls, et cetera? Credit risk issues, which is particularly a problem for Class B buildings that are often bankruptcy remote and really have no credit fundamentally. And a lot of the efforts that we'll talk about today, commercial PACE, probably chief among them, can fundamentally address that barrier and get people the capital that they need to do these projects. And then, as I mentioned, ICP, which is focused on standardizing and making performance risk something that can be managed to all sorts of investors without needing to have an engineering degree to understand what you're looking at. So go ahead and advance the slide. So in the near term, our goal, and I'll get into how we're actually going to deliver this, but in the near term, the goal is to increase deal flow through reduction in transaction costs, through simplifying these assets so that we don't have utilities and investors and building owners each scratching their head trying to determine, is this a project that makes sense, something that I want to invest in. And we do that through standardization and data that's being built against kind of consistent projects that you can recognize. And again, that's what we'll talk about in the remainder. Longer term, the real question is, how do we create an asset class for energy efficiency that can attract the large-scale, lower-cost capital investments that are required to hit all of our goals? We never really get to that long-term plan unless we can solve for some of the barriers that are affecting deal flow in the short term. But at the same time, if we don't put the systems in place today to develop an asset class that has the characteristics capital markets need to actually manage risk, when we do show up with a portfolio of projects, we're going to find that we may not be able to get a rating and get access to the capital we need. So it is important to be thinking long-term even today from a policy perspective. Next slide. So this is the fundamental problem. Energy efficiency is complicated. There are a lot of different standards out there, a lot of different building types and different ECMs. You can go ahead and animate it. I'm having to give instructions here because Dave's left animating my slides, which is fine. This is kind of a little facetious, but the fundamental problem is that there are so many standards out there and so many buildings and ECM and energy conservation measures that you put them together, and if you're a building owner, an investor, or a utility, you're really taking risk and betting on the performance of the overall project, and it's very hard to understand if what you're looking at is consistent or something that you should actually invest in. Next slide. So the solution that we've come up with is to build what we call energy performance protocols, and these are standard recipe books for how you put a project together. And it follows kind of this universal framework from initial baselining and actually doing the engineering through how the project is implemented and actually tested out upon construction, operated over its lifetime, which maybe is the most important and least managed piece of this puzzle, and then ultimately measured at the end and to see if the savings are actually there, and this ultimately becomes a feedback loop. So this kind of process exists in all projects. You go ahead and move to the next slide. What ICP does is aggregate and pull together standards for each of these steps in the process that exist in the market. We don't create anything new, and we create consistent standard approaches that can be applied by project developers in the field and also used by building owners and folks managing portfolios to get consistent projects that they can rely on without building customized RFPs each time or hiring teams of engineers. Right now we have 6 protocols. We have them for commercial and multifamily projects and essentially targeted standard and large project types. So targeted is designed for things like lighting retrofits and controls, single measures. Standard and large are whole building retrofits, and essentially the amount of rigor is scaled based on the size of the project and the amount of risk. So we believe this basic approach covers kind of the full range of projects that exist in the marketplace, and is really reflective of what not the perfect. We're not trying to create the ultimate flawless retrofit. We're trying to create a standard core of reliable projects, and that's really how the system has been designed. Next slide. Now, we have these protocols that creates a recipe book, explains how to do it. That's great. The question is, how do you actually operationalize that? So the next piece of it is that we're actually in the market training and credentialing project developers. And we have, I'm not sure what the exact number is, but we have many dozen at this point that have actually been credentialed. That means they've been trained in ICP and how to deliver it and have the right experience and certifications and insurance to actually put projects together. We also have a national network of third-party quality assurance providers. And so projects that are developed following the protocol from a project developer can be verified by a QA provider, and this role could actually be a programmer utility, or it could be an independent engineer in the market, which is actually how most other markets function, and ultimately can be certified as what we call investor-ready energy efficiency. And if you go to the next slide, the goal is to take that guesswork and all the complexity out of figuring out what it is you're looking at, whether you're a building owner or investor. And there's some similarities to LEED. In one way, really, it's very different than the LEED logo in terms of what it represents. But when you walk into a lobby of a LEED building and you see that plaque, you know that you're looking at a LEED Gold or a LEED Platinum building. You know what that means from a market standpoint. CFOs and investors aren't having to read ventilation guidelines and CFM rates to figure it out. They're able to look at that logo and have confidence that it's a green building and something they can invest in. And we're really trying to achieve the same thing. When you see that investor-ready energy efficiency logo as an investor or a building owner, you know that it's been developed by a project developer that knows what they're doing, following national standards, has been documented in a consistent way, and has already been reviewed by a third party, and it becomes something that you can rely on without having to do kind of exhaustive due diligence yourself. Next slide. So the other piece in the process is how one actually connects the dots, and that's a lot, what's been going on in the LA Better Buildings Challenge and PACE programs and benchmarking programs around the country, but ultimately there are many channels to reach customers, ranging from engineering firms and portfolio managers to benchmarking initiatives and the likes. And what we're trying to do is create a standard platform so origination channels can put together consistent projects that are certified in the same way across this whole full spectrum of channels. Go ahead and click the next advance. And then put that through a consistent process. And so there is a QA process, but it's happening one time, and it's a project that's been developed with a known approach and known data, so the cost goes down. And it gets certified so that investors, and it can be multiple investors, a utility giving a rebate, ultimately a finance company and a building owner can all underwrite that project with limited expense and high confidence. And then if you afford, and then through the performance period, there are plans that can be executed upon for commissioning, operations and maintenance, and measurement verification that are not part of the plans being in place or part of the certification, but ultimately it's up to the investors and the building owners to ensure that they're actually followed through that process. Go ahead and advance the slide. And we do think that this is one of the most underserved pieces of energy efficiency, that the commissioning of the work and the operations and maintenance over the life of the actual project is perhaps the most important single thing you can do to actually ensure that the savings are there in the end. And so this creates an executable kind of set of guidelines that explain what needs to be done and by whom. You can just go ahead and advance right through this, David, but we were working in a number of locations throughout the country, across a number of programs in New York. We're working with the BPU, which is kind of like the CPUC in New Jersey, on their Pay for Performance in Commercial Buildings program. Doing a bunch of work in California, as you can see, Better Buildings Challenge, but also we are excited that just in the last week and a half, a pilot has been approved with PG&E for their on-bill financing program to essentially use certified projects as a one-stop shop. You certify a project in the market, you're guaranteed 0% financing up to $100,000 with no questions asked, which we think is a pretty exciting way to reduce admin costs and basically allow the market to have less uncertainty around the process. We're also the requirement for PACE in Texas, and then doing a ton of work in Europe across about 6 countries right now as well. So we have an ever-growing network. You just kind of build these slides, and frankly, the slides you're seeing in terms of our project developer and our QA provider network is pretty out of date. We have many times that number of companies now provided. But as you can see, we're heavy on logos and partners. So this entire process has come out of about a 4.5, 5-year process. We really originated with industry. I mean, our first stakeholders were finance companies and project engineers and building owners. And so it's really designed to address barriers that are affecting, both the industry trying to deliver these services and also the customers that are trying to buy these complicated projects. Next slide. Now this is what you're never supposed to do, is put a bunch of words on a slide, but I'm not going to go at all deep into kind of secondary markets and how ICP leads to an asset class, but fundamentally, as I said, this is not necessarily a near-term conundrum, but as efficiency scales and as we need to all of a sudden attract larger sources of capital, green bonds, secondary markets, etc., the system that we put in place that helps with building demand currently also creates the fundamental components of an asset class that will enable rating agencies and investors to look at portfolios of projects in a way that enables them to manage risk and actually put money into, and addresses the very issue that Mike Eckhart is actually responding to. And this was a quote out of an article, really a solar article actually, where he's explaining why efficiency can't securitize the same way. We think it can, and we think we're building the systems to do that and address these barriers. Next. We'll go ahead and move. I'll move to the next segment on CleanFund. But one thing I'll say, and we'll circle back on this, is that we would love anybody on the call that's interested, really from any of the segments I discussed, to get involved. Whether you're a building owner or portfolio manager, you can use ICP essentially as a ready-made RFP. A way to request services from vendors that puts you in the driver's seat and enables you to kind of vet apples-to-apples projects without having to have an engineering degree. And if you're a provider, whether a project developer or an investor, we have credentialing processes. They actually there's no cost to this system. It's nonprofit. We'd love to get you credentialed and an active part of this process. We also have an investor network, which can be found on our website, that includes something like $3.5 billion when you combine Europe and US worth of capital looking for a home in projects. And so, we're in the near term, our real goal here is to reduce transaction costs, connect dots, and get projects built. So thank you very much.
Excellent. Thank you, Matt. That was a great overview, and I'm sure we'll have a lot of questions at the end. And just a note on the follow-up, we will include links so that you can sign up for ICP's newsletters and other announcements and get onto the trainings that Matt talked about to get certified either as a provider or to understand more about how ICP can apply for your company. So with that, I'd like to transition to Chris Robbins with CleanFund.
Thank you, Dave, and thank you, Matt, and thank you, everyone on the call for your time. So what I'm going to be talking about here over the next 15 to 20 minutes is, from a lender perspective, how ICP and how the standardization of processes is really crucial in terms of moving our industry forward. And from a capital provider, very important for all of the various stakeholders involved in a transaction to get on the same page and really understand a project in a standardized manner. Next slide, please. So CleanFund, we are a finance platform. We're a direct lender, and we provide capital to owners of commercial buildings and multifamily buildings for renewable energy, water conservation, energy efficiency, and here in California, seismic strengthening work. We only work with and through a property assessed clean energy platform, and we have the platform that we have built out really ranges from the originating through underwriting and then financing PACE transactions across the country. Next slide. And you can build this out. So as we talked about, and many of you may be familiar with PACE already, but the way that PACE works and CleanFund finances utilizing PACE is, again, we provide the capital for certain projects that meet the requirements that I listed before in terms of efficiency, water, renewables, and seismic. And the repayment for the capital that we provide is through the property tax bill of the building that is getting the work done. And the process that we go through is, especially on the underwriting side, and as Matt alluded to in a number of his slides, can be very complicated without standards in place. If we go to the next slide here. Before we get into this a little bit more on PACE, really PACE, Property Assessed Clean Energy, as I mentioned, has been around for about 8 years, but is based on assessment financing that's been around for well over 100 years, and really tries to bring together and equalize incentives around owners and their tenants in terms of the costs and benefits of property upgrades. PACE has definitely achieved and passed the tipping point from a nationwide perspective. Legislation has been passed in 33 states and the District of Columbia, and there are currently 45 active PACE programs nationwide, and I'll get into why that's important here in a second. Just real quick on our financing program, so you understand where we fit in the ecosystem here. Project size, down to about $100,000. We're working on projects that are north of $25 million right now. Our average size project that we provide financing for is in the $2 to $3 million range. Terms, 20 to 30-year fixed rate, really all commercial property types and multifamily. We already talked about the eligible improvements, the type of financing. We are nationwide. We have projects that we're underwriting currently in 15 states and over 20 different PACE programs, and we handle the whole process, including leading up to financing. Next slide, please. What can be financed? And this is you go back to Matt's slide with the spaghetti, the various spaghetti drawing there through all the various providers. There are hundreds and hundreds of different measures that can be financed using PACE. And again, I'm not going to read off of this slide, but everything from envelope to your major mechanical systems, PV, all the soft costs or most of the soft costs associated with these systems. What's key here is that without standards in place in terms of what is eligible from one program to the next, what are the savings to investment ratios? So I'm spending X amount of money. I have a new property assessment of $100,000 on my annual property tax bill for 20 years, and I'm hopefully enjoying at least $100,000 in utility or operational savings from the project that was done. Very hard to one, without standardization and without programs like the ICP, to be able to finance, underwrite a volume of these types of projects, because as we get into the ecosystem here, hopefully in the next slide, there are a number of various stakeholders that are involved in every single one of these projects that we finance. Again, as I mentioned before, CleanFund, we kind of quarterback the transaction, but you have mortgage lender. Mortgage lenders, if there is a debt on the property, the mortgage lender has to acknowledge that this assessment is being placed on the property. And you can imagine how those conversations go or can go. Everything from, you know, I have never heard of PACE and what is this, to acknowledging. And one of the key points that a lot of these mortgage lenders are grasping is, again, looking at ICP and looking at a methodology that makes sense, that is being rolled out across the industry and to all of the various stakeholders. As you saw from Matt's logoed slide before, there are a lot of different participants that are utilizing ICP, and that once a mortgage lender understands the methodology behind what PACE is, what PACE is financing, what the resulting project is going to mean from a performance standpoint, those conversations get a lot easier and the lenders get a lot more comfortable. We then have the PACE program administrator. As I mentioned before, once a state passes the enabling PACE legislation, that just allows for counties, cities, municipalities to stand up their own PACE programs, and it's at the PACE program level where the underwriting of a PACE transaction occurs, where the eligible items that can be financed using PACE, you know, are underwritten. And each one of these programs has its own, you know, separate different nuances in terms of how they underwrite. So, you know, ICP coming in is really, really important for programs to all become standard one to the next. Right now, they're not. So again, this is all about apples to apples comparison. You can imagine we have clients that have portfolios that come to us, and we look at 100 buildings, and 50 of those buildings might be in PACE live territories covered by 16 different programs. And since we're quarterbacking that, it would make our lives a lot easier if everybody was using ICP and working off the same standards. Commercial property owners, of course, they're the client. They're the ones that are placing this special assessment on their properties. They every single conversation that we have with owners who are really looking to drive value within their real estate assets, and really in driving that value, it's can I reasonably understand that a scope of work, once developed, is going to result in savings of X, and that my cost is going to be Y, and there's going to be a positive delta between the two. So I'm going to have a net revenue, positive cash flow or revenue at some point within the first year or two of the project being completed. So again, back to standardization, very important that we're able to show a property owner what a cash flow could look like if a certain scope of work is developed. Partners, again, critical that there are a lot of different partners who are involved in the process, from energy services companies, MEP firms, architects, so forth and so on. And again, critical that everybody starts working off the same standards and platforms, so that all of the various constituents and stakeholders that you see on the screen here have a much better and clearer understanding of what a project looks like and what the underlying methodology and underwriting that went into that project. Next slide, please. So here's a case study. we financed a PACE project for Prologis at Pier 1 in San Francisco a few years ago, and what the owner was looking for was, okay, generally, can we get to a neutral savings between the new assessment that will be placed upon the property value and the annual savings that will be derived from the project. And so we were able to go through using a methodology similar, I think ICP was involved with this. We were able to go through and show them that yes, from a model standpoint, that this is what you will be looking at, and then going back and making sure that post-improvement and commissioning of those assets, that this is what was derived. Next slide, please. So one of the interesting, another layer of potential complexity, without an ICP in place, would be, looking at various property types, looking at various entry points for the use and underwriting of a project. So owners typically will come to us looking for capital in four primary areas or situations. Routine improvements on single or multiple properties within a portfolio. Might be looking at a 5-year capital plan and compressing and accelerating all those projects into 1 year. Recent property acquisitions, and that would be repositioning of an existing asset, spending of capital on significant improvements in the marketplace. Large tenant improvement, and then new construction and redevelopment. One of the things that we see quite often are kind of that barbell effect, where on one side, owners are just looking at the cost of capital, especially for something like seismic that doesn't tie into any sort of energy savings calculation or underwriting. And then on the other side, we have owners that approach us and say, here's my portfolio. If you can go and work with your partners and work with Matt and his group and figure out where within my portfolio you can develop a project or a scope of work that once commissioned will generate that net positive cash flow. And without, again, an ICP or some sort of a methodology and standardization around that, it's very hard to do on a volume basis. Next slide, please. So real quick, just from a process standpoint, we go through, it's about a 3 to 4 month process from start to finish in terms of underwriting, assessing underwriting, and closing of financing. And we try up front in that kind of first month with a high-level project assessment to get to a place where we know that if the project moves forward, we have a pretty good idea of what a cash flow could look like based upon the underlying project, based upon the scope of work that's being contemplated, or at least the opportunity to maybe layer in PV or some other renewable. Next slide, please. There we go. Another quick case study here. This was a really good one, and that should say 900,000 square feet instead of 100,000 square feet. But we funded an $8.5 million project for an owner of State House Square in Hartford, Connecticut, and they were very, very interested in okay, if we move forward and use this type of capital, what are we going to be looking at from a savings standpoint? This was unusual in that the savings were dramatic. They took themselves off of a district steam loop and built their own plant, and were able to save about $1.8 million a year, $900,000 after all the various costs were included. Next slide, please. 644 Broadway. Again, this is an interesting one in that, you know, looking at ICP and looking at some of the protocols underlying ICP. This was a project that was built originally in the late 70s, early 80s as an office building, but it was the tenant was one of the largest dim sum restaurants west of Denver, supposedly, for you know, a number of decades, and then was vacant for, you know, 2 or 3 years prior to a developer purchasing it and doing a complete repositioning and repurposing of the building. Going through again the protocol, we weren't able to come up with utility bills, and since the use was being changed, it really helped out that we could at least follow a protocol so that the various stakeholders that you saw in a slide before were able to get comfortable with the project. And that was a successful funding of about 1.5 years ago. Next slide. So we're headquartered up here in Sausalito. We've got about 24 of us working out of this office. We fund on a nationwide basis, and happy to answer any questions anybody has.
Great, thank you, Chris, and always good to see the case studies. Okay, I do see some questions coming in. Again, if you do have a question, please submit it in the box on the right-hand side of your screen. Okay, question coming in. How easy is it to qualify solar PV or energy storage projects through ICP? Is there a protocol for that, or are there separate underwriting metrics? So I guess that's for Matt, and then I think Chris, if you could talk to that point as well from a PACE perspective, but solar PV and storage and ICP.
Certainly. The Investor Confidence Project is really focused on energy efficiency, and that's not to exclude solar or other things. I would actually say it's mostly the fact that efficiency is hard enough. There are some really good efforts to leverage. I think actually storage is frankly much earlier from a development standpoint in terms of standardization, but there's been a bunch of work done. I would actually look at something called the Solar Access for Public Capital, the SAPC process that was out of NREL, and that process is actually concluded, but out of that came a series of best practices and standards for contract language, PPAs, leases, as well as installation guidelines. I'd also reference for solar something called the Solar Quality Initiative, which is something that I've been involved in, which also came out of that process. And the Solar Quality Initiative looks an awful lot like the Investor Confidence Project in structure, which is not random or a mistake. And essentially, the Solar Quality Initiative has a series of best practice guidelines that are, again, very similar to ICP for residential and C&I, commercial industrial installation and best practices, as well as O&M, kind of for the full life cycle of solar projects. And frankly, there's a whole bunch of work being done right now around data standardizations and whatnot, coming out of something called the Orange Button Initiative that DOE has recently funded. So in sum, the Investor Confidence Project is here to help you for the efficiency measures. I would look at those resources for solar. Frankly, I'm a little less sure where to point you on the storage piece, and hopefully we can put all of those together into projects that actually deliver across both energy savings and generation, as well as storage ultimately.
Yeah, and from a lender perspective, we see a number of projects that have an opportunity to both harvest energy efficiency projects, but also add renewables, and we're seeing more and more interest in storage. And again, as Matt said, that's still a relatively new marketplace. So typically what we'll do is go in and, again, working through partners, understand what sort of efficiency we can drive out of the current systems, out of the current buildings, and then once we've done that, we'll layer on PV and storage and see how that augments the project going forward.
Great, thanks both. Quick clarifying question to reinforce a point that Matt made a moment ago, but is ICP for existing buildings only, retrofits?
Sorry, mute problem. Yes, the Investor Confidence Project is designed for retrofit projects, not new construction. Though, frankly, there's a lot of resources on new constructions. Many of the principles and standards being applied could be applied in a new construction format as well if you're looking for a resource, but the system itself is designed for retrofit projects.
Thank you. So going back to the overarching concept of underwriting savings, for Chris, how often are your clients, property owners, focused on this notion of the savings to investment ratio or savings relative to cost over a time horizon?
Yeah, that's a great question. I would say 60–70% of our clients are interested in looking to add value or harvest value out of existing buildings that they have in their portfolio, and they don't have capital budgeted to do those types of projects. So that, as I think I mentioned before, we'll go in and do an assessment of a portfolio and find those opportunities where a scope of work can be developed around 4 or 5 measures that are kind of the bigger measures of envelope, lighting and controls, heating and cooling, adding some PV, and our clients will then look to move forward on developing those projects that have at least a net positive savings to investment ratio. Others, not as much, but it's really dependent upon the property type, the ownership, and what they're looking to do from a business plan standpoint with the asset. Tenants. One thing I didn't mention earlier is one of the other stakeholders in all of this, in buildings where there are tenants and where the owner, due to how the leases are structured, has the ability to pass through some of the cost or all of the cost of that annual assessment. Along with the benefit, the tenants are going to look for, potentially, okay, well, what you're telling me is interesting, but where's the proof here? What sort of methods are you using to come up with these numbers? So,
right. So in those cases,
throw that in.
No, that's very relevant. I was going to ask that as a follow-up, so I'll go ahead and reinforce it. So if you're looking at a non-owner user, a multi-tenant building, then a protocol like ICP becomes more important because the owner or the landlord needs to be able to substantiate the savings in order to be able to pass through the cost, right? So it gets into lease structures.
Definitely in some cases. That is true.
Right. Excellent. Matt, can you talked a lot about transaction costs. These projects are complex. I think we all appreciate that point. Can you talk about how ICP reduces the transaction costs and how the cost compares to kind of business as usual, how efficiency projects have been developed prior to ICP?
So I'll take that in reverse, actually. So in the first place, what we find is that when you're talking to quality providers that do energy efficiency projects in the marketplace, the names that ICP is extremely reflective of what they're already doing, and that's kind of what we find when we're doing certified projects and kind of doing gap analysis with these players is there's not a lot of delta between kind of the minimum requirements to do a high quality project and what ICP ultimately is requiring through the process. So in most cases, there's actually not a very substantial delta between business that's being done and what ICP is costing in addition to the marketplace. The source of kind of reduction of transaction costs really comes into play though less because there really aren't that. To get a project developed that actually delivers over time, there's not a lot that you can do that doesn't end up cutting corners, and cutting corners you end up paying for over time. So there is kind of a minimum set of requirements around engineering and operations and maintenance and measurement verification that is just frankly a requirement if you want to get the performance out of your project. The opportunities to really reduce the cost of these transactions is to, first of all, standardize that process. So project developers can develop highly leveraged, scalable approaches to delivering projects because they're doing it the same way for all providers. They're not having to relearn and create new processes for each utility and each program and potentially each customer, which is really the state of play today. And then the review process, which is really essential. Somebody other than the person selling the project to the customer needs to be at the table representing, being an owner's representation. And right now what we find is that process exists in multiple points throughout the process. Utilities often spend $20,000 to $30,000 on due diligence costs per project. We find, we talk to insurance providers that spend 3 weeks just trying to get data to then start the underwriting process. Oftentimes building owners are hiring engineers, and oftentimes we're seeing that happen on the same project multiple times. And so the real efficiency comes in is that we have an industry that has spooled up and has invested in systems that can generate standard projects consistently with the right documentation, which then can be handed over to a quality review system, whether it's independent engineers or potentially a program that can validate it. And those QA providers are getting projects that they understand with consistent data, and their process becomes more streamlined. But most importantly, it's happening one time and being certified, and it becomes a project that can be relied on without each investor essentially having to have their own team of engineers. And so that is ultimately where we see substantial reductions in transaction costs. It is really when we kind of take the uniqueness out of this process and basically make sure we're not duplicating efforts in the marketplace.
Right. So said maybe a little bit differently, it's kind of reducing the time it takes to make decisions and ultimately the time value of money, bringing those savings forward in time. Engineering, construction takes as long as it takes, but it's those decision points where you can shorten things up with standardization, making those handoffs cleaner, easier, clearer.
Yeah, I think that's absolutely true, but there are, I think, just more direct cost reductions as well, which is really, project development firms able to really invest in standard processes because they're developing projects the same way all the time. And there are really direct costs associated with, utilities or finance companies or building owners, having to pay engineers to sort out what it is the project is that they're looking at and whether or not it's something they should actually follow through and commit to. So I think time, accelerating and reducing the amount of time is definitely a key part of it, but there are substantial hard costs built into all of these projects that we can also reduce.
Right. Chris, going back to PACE, you talked about a couple of case studies, but just to clarify or reinforce the point, can PACE be used for new construction? And the answer is yes, but if so, yeah. How do you develop the baseline for the projection of savings? How did you do that on your San Francisco project?
Yeah, so that's a great question, and the answer in California, yes, and there are a handful of other states out of that 33 that have passed legislation that do allow for PACE to be used for new construction. As you can imagine, there's been a lot of time spent collectively to figure out, okay, well, what does that mean? How do you underwrite using PACE for new construction, especially if we're already building and putting in these systems to code? And maybe what I can do is use an example of a project that we're working on right now where the owner is building a spec office building here in California, and concerned about how a tenant might view this line item assessment when they're looking to potentially take space in the building. So we worked with one of our engineering partners, Integral, and they came up with a process looking at kind of code plus 1, code plus 2, where code, and let's take a specific system, a heating and cooling system, the cost from an energy spend would be, say $2.35 on an annual basis. Code plus 1, because of the efficient equipment, nature of the equipment that they would be putting in, would be $1.60, and then code plus 2, which would equate to a LEED Platinum type system. They were looking at going LEED Platinum, would be 96 cents. And so it was really looking at, okay, if we're going to use PACE to put this assessment on, want to make sure that there's some underlying methodology there that can be shared with a tenant that would support the, all right, you're going to be paying collectively $2.40, but instead of all energy related. It's going to be made up of this assessment and a utility bill, but it's going to be a much more efficient system.
Great, thanks. Get some more questions coming in. Going back to something you talked about earlier, Matt, Chris is talking about PACE. On-bill financing is also available as a funding option now for projects up in PG&E territory. Can you talk about how ICP is working with PG&E? And then secondarily, is there anything in the works for Southern California?
Certainly. So, yeah, the good news, there's been a bunch of regulatory changes in California recently. One of them is, something called the High Opportunity Program of Pilots coming out of the AB 802 legislation. And one of the first approved pilots in the commercial sector is the on-bill financing pilot with PG&E. Now, on-bill financing is 0% money up to $100,000, and it's historically been, even though it's 0% money, they've had more money than they've been able to move, and that's really been a function of the transaction costs associated with accessing that money through the current rebate system. And so how they're using ICP is actually fairly straightforward, which says if you certify a project through ICP, you as a building owner can have access to 0% money up to $100,000 with essentially no questions asked. And this is great. It really jives with a PACE, which doesn't, commercial PACE doesn't really apply on projects of that scale anyways. So it's actually a really good complement to PACE in the marketplace. And it's a good example of how, standard market-based, technical underwriting can create efficiencies, essentially, where, rather than having a central kind of program where there's paid consultants reviewing the work, often takes months, you can't necessarily be assured when it's going to be approved. This puts basically the market in the wheelhouse of, so there's still a third-party engineering sign-off that's occurring, but it's something that building owners and project developers can actually manage in terms of the overall workflow of a project. So pretty exciting. We think it's a very exciting kind of example of how ICP can be applied in the marketplace. And frankly, so that's happening in PG&E territory. And unfortunately, right now we don't have a corollary in Southern California with those utilities. But I think in general, that's a lot what reasons we're on this call right now, and we want to talk to stakeholders in Southern California is, really to start to bring these ideas to programs and utilities and hopefully get them to align with the systems that we are using in the market already to quantify and manage performance risk. And so, we think that this is something that could definitely be applied. And frankly, from an investor confidence project standpoint, we really think of utility rebates and utilities as investors. They're putting money in some form into a project, in this case, actual money, but oftentimes a rebate as well. And they really are on the hook for the savings being there. So what we'd love to see in the market ultimately is an alignment where we have finance companies, private companies in the market like CleanFund, relying on standard projects, and that same standard project is also giving you access to utility funding, potentially insurance products, and when you bring that project to a building owner, we've developed a brand, and it's kind of getting back to that lead analogy where they look at the project and actually understand that ICP means they're getting something that is done in a standard way that's consistent from a developer that they can rely on, and short circuit that kind of additional set of due diligence that each building owner has to deal with.
Great, thanks. And we're getting close to time. These are great questions. I will flip one back to Chris, going back to the theme of the webinar today, standardization, the Investor Confidence Project. You guys work in multiple states, across a wide range of property types. So how are you guys working to standardize your underwriting process, and where does ICP fit in?
Yeah, no, that's a great question. So you can imagine that there's continued refinement on our process across many different levels. From a what we've been able to do, we've been in the market for 7 years now, is we've refined and standardized our process from a macro standpoint. Now we're really working on refining our process as new states and programs are coming online, really helping to at least provide those programs with kind of our underwriting methodology, as well as, Matt's, I'm sure, kind of front and center there as well. And then product types. So, underwriting a hotel is very different than underwriting an office building versus an owner-user, manufacturing industrial building. And ICP, I think, really serves as a good, for those assets that are, we're finding more institutional in nature, where the ownership is looking and has to report to their various stakeholders. ICP is it's a great tool to utilize on that front, as well as a number of other places.
Yeah. So just kind of continuing on that, and then we'll have one final question for Matt.
Yeah.
Talk about the process with lenders. How is that evolving in terms of getting the existing lenders on board with PACE, and how these standards support that conversation?
Yeah, so that is actually, we're making some really good headway there. We've continued to work on our lender acknowledgement engagement, not only package, but also all of the, the 20 questions that come up, lender to lender. But really the two big concerns that lenders have that can be alleviated, one with ICP, but the other is that in the event of non-payment of the property taxes, there is never an acceleration of future PACE assessment payment, so there's never a balloon that pops up. And then lenders are getting more and more comfortable, again, showing them, using ICP or some similar methodology, that there is going to be savings associated with the project that is being funded. And in a lot of cases, those savings can be either neutral or positive cash flow to the owner. So if you take a cap rate against a net positive NOI, you've got increased value of the underlying collateral that the senior lender has, with
no out-of-pocket. Great. So final question. I guess we'll have two, one longer one and one quick one. For Matt, is ICP or another group endeavoring to kind of build up a database of project performance? Is that something you guys thought about or you're aware of? Mm-hmm.
Yeah, that's a good question, and absolutely, that's kind of the holy grail that we are headed towards, which is standard projects with performance data. So when projects are certified, part of that process is an agreement to return to us performance data on those projects that we can kind of aggregate and anonymize. And so there is a registry built into the ICP website, which is eeperformance.org, where we're recording that. And there's also, we're about a month away from releasing the first kind of full version of an ICP data spec, which is built on the Building Energy Data Exchange specification, which is a standard XML format to enable interoperability and communication of data across platforms and across players as data, not Excel spreadsheets and PDFs, which will make all of that a whole lot easier.
Great, thanks. And last one, then we got to wrap up to end on time. But Matt, how much does ICP cost, and what's the process to get involved?
Fabulous. So we are a nonprofit, and it doesn't cost anything. So we are, in terms of credentialing, training, and certification, we're actually here to help and facilitate and reduce your costs. I actually have engineering resources that we can bring to bear, in particular on pilot projects. So getting involved depends a little who you are. We do regular monthly project developer trainings. We're doing about quarterly quality assurance provider trainings and certifications, and that basically requires going to a webinar and then providing credentials and experience that we can use to validate that companies have the right experience to do this work. Happy to provide, and an easy way to kind of follow up through that is to just join through our website as either as an ally, potentially, is the kind of the easiest route, and then you'll be kind of included in all those communications. We also have an investor network, if you're in that, looking at actually deploying capital, that we'd love to have you participate in and connect the dots, essentially. But on any actual projects that emerge, we're really here to help. So if you want to move down the pipeline of actually certifying projects, either as a pilot or in full production, we can work with you on doing a gap analysis on current process and kind of help kind of align your process that you're deploying with the requirements of ICP. And like I said, that tends to be in many cases a very close fit, and usually requires kind of just tuning the outputs so that they're standardized.
Excellent. Well, thank you, Matt. I think that's a great place to conclude. I want to thank everybody for joining today. Again, we'll be sending out the recording and the slides, as well as Chris and Matt's contact information and links to how you can find out more about ICP and commercial PACE financing for your project. So thank you, everybody. Have a great afternoon. And thanks to our panelists.
Thank you.
Thank you.